Yo guys, what's going on? Welcome back to another weekly forecast slash breakdown. And what a week it has been. Yeah, that's all I'm going to say. It's been a very interesting week. I did go live as well. Thought I'd mention that. That was something I haven't done before. Something that I might do in the future. It was quite fun, but it was also like, I gotta be honest. It was like, oh, a bit nerve wracking as well calling these trades. Even though we call these trades like sort of live on VIP, it's just weird when you're just trying to analyze the market at the same time whilst people are watching as well. But it's all good because we got it out of the way. I mean, CPI just wasn't the greatest. It was a very tough week for us as well. Even though like when looking at the market, it was just like, well, duh, that's why it's doing that. You just have to have patience. It's just one of those ones where the market just ended up getting the best of us for a bit, but the analysis was still valid. So the expectation going into this week was that we're expecting a retracement for price to push down a bit. So we were expecting for price to retrace this move and then fall down lower. But obviously you can see what ended up happening, and that's what I'm going to be speaking about today. So price did give us that retracement, and that's why with CPI we ended up getting that big move above the 50% level. And that's why I was expecting on the live trading, on the live stream, I was expecting for price to sort of push up. But at first we did have this sort of consolidative area right here where I was expecting for price to break below all of these lows here, break below these lows right there, for price to do something like this, give us a spike low and then push up, right? And then with that push up, price pops into that 50% and then falls down. But what price ended up doing instead is we ended up getting these results here where price was lower than expected in consumer prices, and you can see that price ended up pushing up, but because they were lower than expected, which is deflationary, price then ended up giving us a retracement and price ended up pushing down. So this initial push up was for price to get above that 50% level, to actually hit that level where it would, it's that supply area where you'd end up getting that influx of sellers pushing the market down. So that's what we were expecting, and that's why it's always really good to wait at these at these premium areas to sell. And if you guys are sort of selling around this area, just know that there's all of this space here. If you're selling down here, where's your stop loss going to be? You're going to probably have your stop losses above here, and then you're going to keep moving them, and then you're going to be like, well, I can't move them anymore because the risk is just going to blow my account on my prop challenge. So it's always best to sort of wait as high as possible, as low as possible. Although this will result in less trades, it will give you better probable trades, and you probably will be able to, if you start positioning yourself as selling here, any sort of pullback, you'll keep selling, and then you're in the right direction. As you can see, your price will start moving down at the point. Whereas you could potentially start selling here, and then as it's going up, you're selling, and then you're like, well, I'm just getting dragged further into drawdown. This position here is absolutely killing me because price is up here now. But then when it starts to turn around, and then you're going to be like, right, fine, I'll close it right when price went back into profit. That was just a waste of a trade. Then all of this was just a whole bit of a sort of psychological distress when price just went up and you came back down, you closed that entry. So that's one quick thing I wanted to speak about. Obviously, we had a CPI, and then we had a FOMC, didn't we? So you could see that with CPI, when price sort of pushed down, FOMC gave us a push back up towards this high. And what I was expecting, and I shared this on the live stream, was by default, price is now pushed down, right? It's now giving us that price is given that retracement. And with price action, if I go back to the 1 hour time frame, you can see that price has already hit your 1 hour fair value gap, which is here. 1 hour fair value gap, it's reacted off that, it's given us a push down, and now all I'm expecting for is a retracement to continue lower with the stop loss above the high. Because price is now tapped into that 50% area, it's now Wednesday, I'm expecting the fundamentals to continue and to end up pushing price down now towards the rest of the week, because prices on Monday, Tuesday, Wednesday has been bullish. I'm expecting Thursday and Friday to be bearish for price to continue down now. So we did end up getting that, and then I was expecting a sell on with FOMC, but it was just this sort of price action which ended up squeezing us out, and then that's the whole point of it. And this is what I wanted to speak about next, is more about patience, and I'm speaking firsthand, because again, the market's teaching us things every single day. Although we have the backtesting knowledge and we have been in the markets for many years and we understand how price usually moves, every other day is usually different. We're getting new sort of the way the candles are printing, and we're learning new things all the time. And sometimes the market may do things erratic that you may have not seen. Well, why has it done that? So we're always learning, and we're always sort of taking this process step by step. So what I was looking at was with your 5 minute imbalance you have around about here, but I would like to see price push higher. So we entered a sell around about here, but my stop loss was about 38. The sell was around about here, which was at 50%, and the SL was about 38, which is about here. And this would give me a 50 pips stop loss. Ideally, the stop loss should have been placed above here, but it was around about 80 pips. So at this point, you want to think that, right, you don't want to suffer your stop loss a little short, but you wanted it above here. So is this a good trade to take? No, because it's not ideal. I would like to keep my stop losses as tight as less than 50 pips. And these are usually the trades that end up doing well with in terms of risk to reward. But now, because the stop loss is above the high here and price is pushing up, I was going for the approach that price would like to take out this high and push up above this high. But when we ended up getting this just before the news, this ended up saying that, right, what's going on at this point? We're thinking of selling, we're thinking of buying, and now we're all confused. But what ended up happening is the price just ended up pushing back into this area here, the supply zone, and then price broke structure, and then with FOMC, we had a push down, retracement, and continuation lower. You have equal lows around about here, where price tapped into, and we ended up getting that taken out during their Fed press conference, and price continued lower. So the initial analysis was all correct. It was just about your timing, and should you really even be trading prior the news event, because again, the FOMC news event was happening around here. So the question was, why are we selling as prices up here? Although we're anticipating the move, we did get squeezed out, and that's something that I'll take going forward. And it's just something I wanted to sort of let you guys, you're following me on this journey as well, and I wanted to make you guys aware of the same thing. So you ended up getting price continue down and continued lower over Asian sessions, so you could have held that trade overnight, where price ended up pushing down. But now we lead ourselves into PPI, which was actually a very, very, very volatile day. And I'm going to show you why, because there's 3 places you could have caught potential more than 100 pips. But is that good to take all 3 of them, or is it good to take one? And that's one thing I want to explain before I get into my weekly forecast. Okay, so what happened after FOMC, where you had a push down from here down to there, right? This low was then taken out by a sudden drop during London session, which is this candle. Okay, so I'm going to zoom in into that, and I'm going to explain this here. So we are currently looking at a order block, which is here. Drag that across, you can see that price sort of tapped into it twice, and we were going for a sell on this retracement. We got squeezed up, price took our stop loss out, and then price ended up dropping, right? When you get moves like this, where price takes your stop loss out and then ends up falling 700 pips, tell me that doesn't affect your head, because it affected with mine. I was so angry the fact that the market ended up pushing straight down after taking us out. So it's like, okay, I should have had the stop loss higher. So now at this point, I'm like, damn it, we missed out on 100 pips, right? This was during London session. So I'm going to type it here, say London. Okay, so that was during London session. So now we are pre-US session, so around about 12 o'clock. So US open before sort of New York Stock Exchange opens, and price is down here. What's price done? We have cleared this prior lows here and tapped in to this fair value gap. Obviously, I'm not a buyer at this point because you should be. Well, when price is this low, yes, you are a buyer. But my main analysis was being bearish because I would like to sell price this the rest of the week. So I'm looking for sell positions. I'm positioning myself as a bear for the rest of the week here. So now I'm expecting for price to move up. So now at this point, price ends up pushing up. So I'm expecting for this area to hold, for price to go down. But then I'm watching the market and I see price continuing up. And this was with PPI release. So I'm not going to sell here because obviously with PPI release price, if price was this high already, right when the release came out, I'm expecting it to push higher. So now looking at the market, if we go to the hour time frame and we see what sort of liquidity we have left over, you can see that it's this big gap left from FOMC here, and that's the 1 hour fair value gap. I was originally expecting price to push up into here and then fall, but price ended up falling first, pushing up now, and now I'm expecting, right, that's the manipulation done, let's see price fall. So I sent out the signal to start placing the sells around about here and for price to start pushing down. Price did push down, gave us 50 pips, came back to our entry, because just being so volatile, just didn't want to sort of be in this position because again, my mindset has already been wrecked by London sessions, sort of sell early. So at this point, I am now saying, right, I'm expecting the move down. We did end up getting the move down. So price did push up here with this wick, took out this swing high here, and then price ended up pushing straight down back to these lows. Now this is what I want to talk about. This is the main trade that we ended up taking. Because look, this low here, price is now created equal lows. Let me delete this array and then put it here so we can then see and put relatively equal lows here. So price is creating a double bottom and failed to break the prior low. Our main expectation today is bearish price action. Obviously, yes, you can look to the right and see that, but my understanding of the market was I was expecting for price to push up here and continue. At first, I was taking this area here to sell from, and my stop loss was slightly larger because I was taking into account that price could tap into this area here and then fall, and that's exactly what it did. Price tapped into this area and look what it did straight after. In about, say, in a matter of, say, 20 minutes, no, 15 minutes, price dropped 120 pips and took out this prior low that I was expecting, and then price continued lower for the rest of the night. Right, that was in 1 hour of trading here. That price did 200 pips. Now this is the move that I want to speak about, is because this is the move that you get after New York session open, right? So after that 10 a.m., can you remember when I was talking about that 9:30, 10 a.m. If you guys have been following me, after that 9:30 business was going around here. So New York Stock Exchange opened here, around here. So when we were getting this sort of manipulation move, then price dropped, gave us that move to 11. So this is all 10 o'clock price action. And then we had 11 a.m. New York time. Price was like, I'm done now. I'm done manipulating. I'm going straight to my target. And this is the move that you want to be in. And this is what I'm trying to talk about, is when we sort of trade, we can catch all of these moves, right? We can catch all of these moves. Let me circle them. There's 3 moves on Thursday, and we could have caught every single one of them. But which one is the easiest and the one that where we had more confirmations? It was this one. The reason for that, obviously, you could have taken this, and you may, the way your style of trading, you may have caught this, and you may have said that, yeah, there is confirmations. It was filling this gap in, and we had the SL above the high and continued. Yeah, that's fine. But for our style of trading and what happens consecutively, we know that when you're trading gold, New York session is the best time to trade gold. Why? Because you have the most volume. Now, if you take into the rest of the price action into account and know that, okay, I'm only going to be entering at New York session, you have now seen the manipulation happen with PPI. You've seen the confirmation after. So right after the PPI news, price is now being digested and the market has moved down. It's created equal lows, which is now a target. This is confirmation saying that, right, the market's saying that I need to come back for this. I want to go lower. The initial bias for for the week after Wednesday with FOMC was now bearish. Why? Because we broke the swing low. We're now continuing lower. Any retracements will continue lower for our target, which is here. And then what happened? Price tapped into the box and then dropped and then took out the target, and technically you're done for the week. And that's why we didn't mainly look for trades on Friday, because from that one trade we were happy. Although it wasn't like the best of weeks, and obviously I'm going to be as honest as possible, it was a tough week prior, but we're going to take this into the new week and we're going to start clawing our way back. And that was something, the main thing I want to talk about with PPI, because Thursday was the main day to trade. And now this this puts a question forward on, should you trade CPI FOMC day? Should you have traded this day here? Although it was very, very choppy, very hard to trade, and emotions are all over the place, and price didn't really move much, or should you have just taken and waited for that confirmation and just took that one trade on that Thursday and then just be done? Because you've just caught 200 pips in a matter of like an hour or two, and then you're done and you can enjoy the rest of your week. Let me know in the comments of what you think if you sort of listen to all of this and not skip through the video. Would you have traded CPI, or would you have just taken that one move on PPI? Let me know in the comments. But other than that, then we had Friday where price pushed up, and that leads us to the next week's forecast, right? What's happened on Friday? Why did price push up? Where's price likely to be heading next week? Right, so on Friday we were seeing that price pushed up significantly, and this opened the door to bullish price action as well as bearish. So price could move either way. If you're thinking that price can move either way, now this is a question you need to ask yourself. Should you now trade this day? Because right now you're seeing both sort of moves, right? You can see bearish and you can see bullish. When we were here at PPI, we were expecting that, we had the confirmation that price would likely go down. We had a big move after the news, and we were more likely to expect that, right, I'm definitely expecting price to push down. And I said this in VIP that I'm very confident that price will fall today. And it did. Because if price pushes above this high, that's when I'm now switching by saying that, right, I'm bullish. But it didn't. It fell, only went to around about 50% of the PPI and then fell. So at this point, on Friday, we're now expecting for both price action, for price to take out this high and low. And if you're questioning yourself, saying, which way is it going? Don't trade. Wait for this day and look, exactly, nothing happened. Nothing happened during US session on Friday. If you traded this, you probably would have been stuck in consolidation thinking that, okay, price has moved 100 pips one way and then moved 100 pips the other way, and you would have been trapped. And this is one reason why I didn't trade today, because it wasn't as clean as what was happening on Thursday and Wednesday. Price just already pushed up during London and saw US and just sat there. So now, what am I expecting going to this week? You can see that price has now filled this 1 hour fair value gap. So now we have equal price delivery in this area. Now we need to just note down where our buy side liquidity is and where our sell side liquidity is. So we can see that price sell side is down here. We have now wicked below these lows here. So this swing low, price is now spiked below it and pushed up. I'm going to put something on this chart, which you may know, right? If I do these three areas here, what does this look like? Yep, it's a head and shoulders pattern. You can see that price sort of pushed up here, pushed up there, came back down, and then price ended up pushing lower. And with this sort of move here, price spiked below the swing low, and then price took out this right shoulder here. Now with that, this gives us an indication that price is bullish and price wants to continue moving higher. So my forecast for this week is I'm expecting for initial prices to be bullish. And before I sort of explain why, as I'm going to explain why, I'm going to switch over to the daily time frame, and you'll start looking at what the daily has to offer. So let's start off with our higher time frame analysis and look at what's going on. Again, if you guys are enjoying this video and still watching it and wanted to know more about the weekly forecast, leave a comment leave some comments. It really helps me and really gives me your feedback on what you think of my videos, and if you sort of find them very insightful. I know we have quite a few commenters who are quite regular, so thank you for commenting. And yeah, just keep up the good work and stay strong. This is trading, and this is a very tough business to be in. But anyway, let's continue. We're still trading within the range of the NFP on the Friday move, where we had a drop from 23.86 down to 22.82. So it's around about 1,000 pip drop. Let me just manage that out for you. There you go, it's around about 1,000 pips. So now we're still trading within it. Our main targets is obviously our main sort of swing highs at the moment on the daily time frame is this high and this low down here. So if I move that just there, so you can see that we're currently trading within this range. When we're trading in the range and price is sort of pushing up and hasn't broken any higher low yet, this is giving us indication that price still wants to move down, right? It's only at when price decides to break this swing high, do we change our long-term higher time frame analysis that price would like to continue to attack that high, right? That's the only time I'm going to be switching to a higher time frame analysis of a bullish scenario where price would like to continue higher. But for now, since we're trading within this candle, we'd like to see price continue pushing up on the daily time frame and then give us signs that price wants to start continuing down. So at the start of the week, I would like to see price be bullish. We have, if we check the calendar, we have Empire State Manufacturing Index on Monday, so gets to be a bit of a slow day on Monday. Tuesday, core retail sales, so I think we'll get a bit more volume here. Unemployment claims and flash services PMI on Thursday, Friday. So Wednesday will be a quiet day without any fundamentals. So I'm thinking that we may get the turnaround on Thursday, Friday. So you may see Monday, Tuesday, Wednesday move into a bullish day. We could even just get Monday as a bullish day and then Tuesday drops and then we get a continuation for the rest of the week. So it's just what we get in terms of price action, and I'll give a midweek update for that if anything changes. But at first, I would like to see the CPI high get taken out. This is our first line of liquidity. Why am I looking for bullish price action, you may ask? Is because price has already collected the swing low liquidity right there. So right here. And then what has it done to confirm a bullish move? It's taken out a swing high, right? So this was our PPI sell that we were looking at. Price is now is pushed above that after taking sell side liquidity. So this gives us indication that if we get any retracement and price and price holds above this area, we're likely to see price continue to the next swing high because it's taken at these highs as liquidity areas. These are liquidity pools and price is targeting them. So at first, I would like to see price sort of take out this high here, tap into the daily fair value gap, which is marked in the box. This is also a 4-hour fair value gap, and you can see it's also a 1-hour fair value gap. So we got a big zone here. So price could push all the way up. It could push all the way up. It could tap into around about 23.60. It could even stop at 23.50 and then fall. But at the start of the week, we need to wait for confirmations. So if price wants to fall down, this could give you a setup for a buy, right? You could get in a buy at the start of the week, right? If price wants to continue pushing up here, you want to now wait to see if there are any sell positions. Why? It's just because of this 50% level. If price is pushing above 50%, you don't want to be a buyer above 50%. It's more probable, more likely that more sellers are sitting up here. Do you want to be a part of their supply? You want to be a part of their move. So you want to see that initial drop, and then when price retraces back to that sort of supply level, this is where it's best to place your sells and then continue price pushing down. So, in short, I'm going to give you my little path on what I'm expecting this week. I would like to see price sort of push up, fill this daily fair value gap, tap into this break block here that we have, tap into this area around about 23.60, see what sort of reaction we get. If we see that price action is moving like this, with swing lows as it climbs, and then you see a price break a prior swing low, then you're likely to see price retrace to that and then continue its move back down. Now, if I continue this path and draw it on a 4-hour time frame, and you see price sort of push all the way back down like this, and then you see price retrace this move, say for the following week, for example, and then continue lower, this has now become a larger time frame head and shoulders for a reversal pattern. And that is something that I'll be expecting to see in the upcoming weeks. It's good to plan this. It's good to sort of stay one step ahead of the market and always sort of leave your drawings on the chart, so you're always ready to have any plan that happens. Obviously, if this stuff doesn't work out, I will make out a midweek forecast, but the main targets at the moment is that price is still retracing. It's still retracing this NFP move, although it's trying to take people out on this way. You want to still see what price wants to do, whether it wants to do something like this, continue lower, take out that low retrace, and then continue. That is what we want to see going into this, because this is the range that we're currently dealing in. So hope you guys enjoyed this weekly forecast. If you did, don't forget to leave a like, don't forget to subscribe. The links to all the VIP stuff is in the description, free channel in the description, the whole lot. Well done if you made it throughout this whole video, because I know I love to talk a lot, but I love to give out some free information when we're sort of doing these videos. But that's pretty much it from me. It's been XAUUSD. Peace out.